Let's now put moving averages into a practical use, and we will do that through our case studies. We've been through 3 in terms of the support and resistances, but on the 4th one, I want to get back into mapping things out. So keep that in mind. Like I mentioned, I want to keep support and resistances a common theme throughout the remainder of the course. So on number 4 example in the moving average session, this video, we will go back to getting more detailed about support and resistances. But we will go through all 7 case studies on this one with moving averages, and it shouldn't be that long, just because as I said during the previous video, moving averages are a great efficiency tool, and when you just look at them and just kind of take a look at a glance, it's going to tell you where are the trends at, where are the short-term rivers at, where are the medium-term rivers, where are the longer-term rivers. So it's a very efficient tool, and it's one where literally, hopefully I can display that. You just look at it, okay, this and that trend, that's what's going on, or maybe okay, we have spaghetti, but point being, it should be a pretty quick video, unlike some of the other ones you're used to that I've gone well over half an hour, just because moving averages in and of themselves are a time-saving tool. So let's get started. First example here. So now you see that we've added something else to the chart all of a sudden. If you remember way back when we first got started in the course, all this was a line chart. Then we went to a candlestick chart. Now we're going and adding our first technical indicator. Of course, other than volume and price action, we now have moving averages. So to just go through a couple things, and like I said, by no means do you have to use these color distinctions, but as you go through your charting and such, you'll just associate certain colors with things. So for me, there's no reason why. That's just kind of how it's happened to be. Yellow is going to be is an 8-period SMA. Keep in mind I'm saying period because I never said what time frame this is, but this is the daily chart. So this is where I could say it's the 8-day SMA. Whereas if I'm on the 60-minute, I can no longer say it's the 8-day SMA, because why? Well, it's not measuring the past 8 days. It's measuring the past 8 periods, which if this was a 60-minute chart, it would be the past 8 hours. Or if this was a 5-minute chart, I couldn't say it's the 8-day simple moving average, because it's measuring the past 8 periods, which is the past 40 minutes, because each one of those candlesticks would be 5 minutes. 8 times 5 is 40. So just keep that in mind, and get in the use of calling it what it is. Again, if let's say this is the weekly chart, should I call this the 50-day simple moving average if we're on the weekly chart? No, this would be the 50-week simple moving average, because it's measuring the past 50 weeks, not the past 50 days. Or again, if this was the 15-minute, could I call this the 50-day simple moving average? No, it would be just the 50-period simple moving average, because it's measuring the past 50 periods of 15 minutes. And I'm not sure what the math is on that. I'm not even going to try. But regardless, just keep that in mind. A little thing that I've noticed, and I do it sometimes too. I'm doing a chart analysis on a 15-minute time frame, and then all of a sudden I'm calling these things. And here we have the 50-day, and I got to always correct myself. 50 period. So just one of those things that to keep in mind. You don't want to call something, or you don't want to be under the impression that this is the 50-day. When this is actually, let's just change it real quick. So let's see how the 50-day changes. So right now it's measuring the past 50 days. Let's see how it looks at the past 55-minute periods. As you can see, much different. It's no longer going sideways. It's pretty much just going, or it is pretty much just going sideways. It's no longer has that upward slope like it used to. So let's start talking about our actual example. Like I said, we've gone through support and resistances, so I'm more just going to throw these up as we go. But we talked about this area being important area of support. We had this hammer candle form, and it happened to just, hey, look, it happened right around this level of support here. But now let's look, and things get that much more interesting. What else about moving average did we learn in the previous lesson? We learned that support or moving averages can also be supports and resistances. So now not only did this nice indecision candle, possible reversal candle happen around this area of support, it also happened right here at this very key moving average, which is the 50-day simple moving average. And as I call it, there's two quote-unquote godfather moving averages, and those are the 50 and the 200 period simple moving averages. I say that because most chartists have them, and if you're taking notes, definitely write that down. Godfather moving averages equal 50 period and 200 period simple moving averages. And the reason they are, very, why I call them that is because pretty much all technical traders and really even fundamental people use them. And, if you're a fundamental player and haven't learned too much about charts, one of the probably few things you do know about charts is keep an eye on the 50 and 200 period moving averages. So a lot of people use them. I'm not going to say everyone uses them, but a vast majority of people do. So there is that component of self-fulfilling prophecy where everybody's watching, okay, it should act this way, so I should do this. And because so many people are doing that, it actually happens. But it's an argument where, it makes me chuckle when people are like, oh, that stuff, that's just all a self-fulfilling prophecy. Well, if you're telling me that there's self-fulfilling prophecies out there, don't you want to know when these prophecies are supposed to take place so you can take advantage of them? So it's always been kind of a silly argument. I'm not going to use it because it's just a self-fulfilling prophecy. Why would you not do that? That sounds kind of almost like there's no such thing as easy money, but that sounds like, okay, I can really leverage things into my favor then if you're admitting there is a self-fulfilling prophecy, and there is a lot of times. But it makes sense because so many eyeballs are on these. But so we have the 8 period SMA, and then we have the 50 period SMA. So let's just talk about trends real quick. We've just noticed, hey, look, this moving average has happened, or this candle has happened next to this moving average. However, that doesn't necessarily mean anything because this could just be spaghetti. But is this really spaghetti? I would not call it all. Look at the general flow of the 50 period. Nice upward slant. The smaller number, right, because this is the 8, the smaller number is above the bigger number. So we know that this is a trend. Sure, right now it is pointed down. So technically the little short-term river does have a little bit of a downtrend to it. However, when you take a step back and look at kind of a bigger overall river, you can see very strong overall river. And then I did this on purpose just to kind of hide it. But then the third moving average we're going to use. And then look at this. So the pink line down here is the 200 period moving average. And again, because we're on the daily chart, this is the 200-day simple moving average. So now check out this. Nice distance between them. Shorter period moving average above the bigger period down here. So we know that the overall, river, the overall trend is certainly bullish. So a little short, small little downtrend right here. Sure, if you're a very, very short-term day trader, then you should definitely be careful. But if you're in this for more of a medium-term, longer-term swing trade, and I'm not going to quite put a definition to medium and long just because that's going to be different for everybody. But point being, yes, short-term trend right here has gone in the bearish direction, but it's kind of like a small little stream on a collision course with a much bigger river, and then that much even bigger of a river down here. So yes, short-term trend, it's a pullback, but looking at it from this perspective, that's all it is. It's just simply a pullback within a much greater overall trend. And so when you factor that in, that small little pullback within an overall trend, and then you see, oh, look, hammer candle. Oh, look, hammer candle forming next to this area of support. Oh, and right next to the 50 period, which is a big river. And also its bigger brother right here, the other Godfather moving average, the 200-day simple moving average. That's also a nice, overall uptrend. So lots of things going for it. So when you start to combine all those pieces, and I know it's a lot, but when you just stop and think about it, go through the checklist if you need to. Candlestick, what's going on? Where's the location of the candlestick? Okay, where are the trends at? Well, yeah, short term it is downwards. However, what about the higher value moving averages? Well, the 50 going up, the 200 going up. Okay, so sure we have a short term trend, but that's probably just more of a pullback because the price is pulling back because we have these trends which are all bullish. So I'm just going to go through it because you're starting to know. So it shouldn't be that shocking that, hey, look. And now we have, at this point, what's going on? Now we have smaller number above bigger number, and then this smaller number above bigger number. So everything is pointed in the bull's direction now. The short-term trend, has now changed. And again, if you were a short little term day trader, then yeah, this part of the chart you would be interested in. But the longer term people would be thinking, wow, this could be a great buying opportunity, especially now that it's hovered around this area of support. And sure enough, it went. But, it's kind of like an onion. At the core of the onion, we have just the candlestick. And then the next layer of the onion, we have, well, where's the location of the candlestick relative to other levels of support? Now we have the next layer. Well, where is it relative to, the trend, relative to other moving averages? Well, not only is this one sitting right at the 50-day, relative to the trend, it's just in a pullback. So picture things as an onion and start at the core and then start to work your way out further and further. For our next example here, the candle, that it's forming kind of, at a location where there's no price history. So let's look at the trend right now. From, a river perspective, it makes sense why people, have been kind of being sheep. I mean, you have the 8-period simple moving average, nice upward slope. It is above the 50-period. 50-period, you can see here, getting nice upward slope. It is above the 200-period. And even the 200-period has a nice upward slope to it. So as far as trends go, it really can't get any better than this. It's very nice. Everything is working together. However, this is why technical analysis, there's not just like one candle in and of itself doesn't make or break a chart. Just because the trend overall doesn't make or break a chart. Now, it may tell you, okay, if the price does start to pull back, that's something to keep an eye on. But when you look here, if you started at the trend and thought, oh, it's beautiful, I'm buying just because of trend. Well, you didn't really do enough analysis because you never factored in the candlestick portion of everything. Remember the onion. You got to start at the core of the onion. And in this one, the core of the onion isn't very favorable, even though when you get to the layer of the onion of, okay, well, our moving averages are good and the trend is good. Yeah, but price action, immediate price action is king. And immediate price action, which is what candlesticks are showing us, is that things were going well and then sellers have potentially stepped in. So you don't just want to throw in a buy order right up here right away and then say things are fine because the trend looks good. Well, in the that may work out kind of in the overall picture, but even if it does work out, this candle suggests that you could probably get a little bit better of an entry point. So let's just see how this one unfolds, and you do know. So right here, remember this candle, wow, isn't that amazing? Because we also had a level of support. There we go. Right around here. Or I can't quite remember where I drew it. But regardless, look at this. This candle formed, hey, right here at that moving averages. Surprise, surprise, another moving average trying to act as support. So it hovers around that moving average again. And then that hammer. And then look at that. Where does it decide to bounce? Right there. And I'd agree. That's got to be, because that's just so random. You look over here, and there's actually, there's no support or resistance level or anything where it would actually, totally make sense. But yet it just happened. Now, it didn't quite hit it, but I think we can all agree that's pretty darn close. Came down there and bounced. So again, we look at it again, and now we can start to think, I posed a question during the last support and resistance, when it gives you a perspective to, well, this pullback is it's definitely pulling back, but, how intense is the pullback? How bad is it actually getting? Well, now that we've added in another layer with our moving averages, we can see, it broke and now closed below the 50. That's, things are starting to get that much more intense. However, what does previous history on this one show us we should be aware of? Well, if you look here, slightly closed below the 50 and then bounced. Right here, actually 2 days below 50, but then bounced. Opened below 50, but then by the time the close came was up here. Opened below 50, but by the time the close came was up here. So the 50 has a big history. So just an example here, literally four examples here of the 50 acting as support. Now, just because it's done it 4 times before, could that have been a good buy right here? Yeah, it could have been a good buy just because it makes very rational, logical sense. If you're looking back at the previous history of the chart saying, hey, you know what, look at this moving average. It's acted as support multiple times, in fact, 4 times. So if I try to pick up some shares right around here, the odds seem to be in my favor. I would agree with that analysis, and I would agree with that rationale and logic. It's definitely not random, and it's not like you're just randomly throwing darts at anything. So let's see how this unfolds here. So now what are you thinking? Now what's just happened? You're thinking, well, compared to these 4 other times in history, this is pretty far below now. So what did that just tell you? That tells us, okay, this pullback is getting pretty severe now. I mean, this could potentially be a reversal. And I still say potentially because there is still hope for it. What do I mean there's still hope for it? Well, what do we have sitting down here? We have the other Godfather moving average, where if the price can remain above there, then the overall trend would still remain bullish because it's able to maintain above, the kind of big overlooking river of the 200-day simple moving average. So sure, this buy wouldn't have been too good. You'd probably, have been stopped out. But as far as the overall chart is concerned, there is still hope, and that hope comes in the form of the pink line down here, which is the 200 period simple moving average. So let's just see. So you remember what happens, and then it does make the recovery. But isn't this amazing? Look right where it goes down. Now, of course, again, yeah, it didn't quite hit it, but I think, remember the web effect. I think we can all agree that the low there was well within the web effect of this moving average. So I can guarantee when this actually happened at this point in time, there are some chartists down here that were saying, well, there's the 200 period. I mean, look at how much, remember, this was this very dramatic candle. So it was all sorts of drama all the way down here. And then you know that there are people, the chartists, who have eliminated their emotions. They were down here. They accumulated some shares knowing that the 200 period simple moving average is right here. And then they got a very, very nice entry. So it just, that much more, isn't it? Just, to me, it's amazing that now when you add this new layer of the onion, it's not too shocking to see why the lower shadow stopped where it did. It stopped because, call it a self-fulfilling prophecy, call it whatever you want, but we had this big moving average down here, and it acted as support and, bounced the price back up. So before, we just looked at that candle and thought, okay, that's just where it happened to stop. That's just where, the bearish drama happened to stop for the day. But now when we get to this layer, oh, okay, that makes a lot more sense why the bearish drama stopped where it did. And, it would have made a very nice entry point as the price, obviously headed back up. For our next example here, it's our hammer candle example down here. And, if you remember from the supports when we drew those, by splitting the difference, we drew I think it right around here somewhere. So it's at this area. However, now when we look at the moving averages, the picture gets a little bit more clouded. It's not quite a no-brainer type play. And this is one where if you thought, you know what, I'd rather just stay away from this one, especially on the long side, I would say, hey, you know what, I don't blame it. If you did decide to try to play it, that would be fine. But now that we add the moving averages, in my mind, things just don't become quite as crystal clear like some of our other examples. The one reason that I would understand if you played it is because the overall river, which is the 200 period, again, that pink line here, you can see it does have an upward slope to it. So sure, the price has been falling, and yes, that's reflected in both the short-term river and the medium-term river. So when 2 of the 3 rivers are bearish, sure, the overall overall river is bullish. So that's why, for me, it's just not quite as comfortable as if, all 3 rivers were bullish. But, if you did want to play it, that's why I said I can see why you would do that with the 200 period. But really, for me, I probably wouldn't play this one. And yes, I know that it goes up, which just shows that, prices can still go up. But as far as having every single, leverage and, having things in your favor, not so much. Now, there is a point at this where it, things totally change and it becomes okay, now, this could be a nice little play. So let's just go through it. Remember, the price is below these moving averages. So because the price is below it, should these be counted as support or resistance levels? Hopefully you're saying, well, they should be counted as resistance levels because the price is below. Absolutely. So with that in mind, Let's just see how this unfolds. So right there, isn't that amazing? Where do these highs of these candles stop? Oh, they stop right here at the 8-period moving average. So now at this point, what has happened with the chart? Well, besides thinking, well, yeah, no kidding, Captain Obvious, the price just made a big move up. Yes, a gap up, a nice, strong, authoritative candle on strong volume. So now what happens to these moving averages? Resistances become support. Resistances become support. Now these areas, or now these moving averages, should be areas of support. So any sort of pullback here, hey, you know what, might be worth seeing, if they're worth, or if they can hold up as support and might make a decent entry point. So let's just see. Those areas should now be support. So look at that. One period here. This next period, bounce off the 200, bounce off the 200. And then the third time comes back down. Although it doesn't quite hit it, that's well within the Webb effect. And you can see eventually it starts to creep its way back up. So if you bought this would be more of the strategy or the approach that I'd feel with, because right here, yeah, it can bounce, but it's got it's going against the river on any sort of bounce right now. But once it get back up above here, okay, on a pullback here, maybe it would be worth it. And then it actually gave another opportunity there. Granted, not a huge move up, but regardless, the price still did make moves up from this moving average. So one where from the get-go, when the price was right here, when the price and chart looked like this, I'd probably stay away. I'm not saying that you'd have to stay away. Maybe you would look at this and say, I like these setups for whatever reason. That's fine. But when it gets up above here, okay, now it's a little bit different. That could be more of an interesting play when it converts these moving averages from resistance into supports, and here it ended up working out. But there's no shame in saying I'd probably stay away. And that's what I want to point out with these case studies is I'm not going to put perfect, beautiful examples for every single one. And this is where I want to convey the fact that it's okay to say, okay, things were looking good, when we went through the supports and resistances and candles, but now that we've added this layer of kind of moving averages and trends, it's just not quite as attractive as it once was. So I'd rather find something attractive find something more attractive, and there's nothing wrong with that. All right, for our fourth example, this is where let's hop back in and break this one down from a support and resistance standpoint. So as far as supports and resistances, now hopefully the very first level of support really jumps out at you, and that is relative to this purple line here, the 50-period simple moving average. So now what's going on? Well, we have this indecision candle. This would technically be called a spinning top, but if you're calling it indecision, perfect. Indecision, so core of the onion. Well, let me take a step. It is green, so we know that price closed above where it opened. Well, now we're going to real estate mode. Where's the location of it in terms of supports? Well, the very first support that hopefully stuck out was, well, look at this. Came down here and bounced beautifully off the 50-period simple moving average. So it's sitting right here at that support level. Interesting. And remember, what is one of the core principles of technical analysis? One of those three things. Try to learn from previous history. So looking at previous history, you can see acted as support here. Granted, yes, I know the price dropped below it. However, by the time this candle was done forming, price had closed all the way up here. Other previous history, look at this. Got close to it, got close to it, got close to it, and then went on a very nice move. So now you got to be asking yourself, okay, it's closed right here. Is this history over here? Is this going to repeat itself? Is it going to head back up here? Well, maybe, but you want to make sure that, are other things still the same? I mean, at this point, this trend was still up. Well, yep, this trend is still up. What was the 200 doing? Well, let's zoom out and see what the 200 was doing. And now you see this. And if this isn't a powerful overall bullish chart, then I don't know, maybe get some glasses. But I mean, look at these. Beautiful separation. Smaller period above the bigger period. Smaller period above the bigger period. I mean, but just look at these bullish rivers. I mean, the 50 period, 200 period. I mean, this is an uptrending chart. Now, yes, there's been some pullbacks within the uptrending chart. How can you quickly see a pullback without even looking at candles? If I were to remove candles and just have the moving average up here, how could we tell where the pullbacks are? Well, just look where the short-term river goes temporary bearish. Temporary bearish, up. Temporary bearish, up. Temporary bearish, temporary. Hopefully you're getting that way. Didn't just went sideways, so kind of went to a neutral river. Here's a little bit bigger of a temporary bearish river, but look where the bearish river, it's kind of like I said in the previous example, it's like a little stream that's getting ready to meet up with a big moving river. And right here, met up with a big river, and then up it went. So now we're starting to see the same thing. So from a previous, okay, wow. So it's looking like history has repeated itself again in terms of this. Yes, sure, the yellow line is down. Therefore, the short-term river is a little bit bearish. But maybe history is getting ready to repeat itself. So now what about just other normal areas of support? And remember previous, breakout or highs and lows. So over here we had, let's just kind of look at the dots. We had a high. So I'm just doing this to help with kind of, where to potentially draw a level of support. So those are all the highs. Sure, you could put it up there, but that's really only one data point. Sure, only one data point. But look at this one right here. Do you notice how this dot and that dot are basically the exact same? And remember, split the difference. Can we ever split the difference? Well, if we move it right here, not only are we putting ourselves next to two dots that are the same, we're actually doing a pretty good job of splitting the difference because there's some dots that happened down here, and then there's some dots that happened above us. So that's where I would put the support, and that's why. Now, if you wanted to put it there or down here, that's fine. You're not going to get any argument from me, but just kind of justifying how I look at it in terms of picturing all these as dots and then wanting to try to find something in between all those. But if I can get a spot where there's two dots that are essentially the same, I'm going to put it right there. So that's where I would put my level of support. Now, why is this support? Well, remember, let me clear these off. At this time of the chart, it was a level of resistance. Why was it a resistance? Well, because it was this previous high area. And then you can see once the price got through it, made a nice move. So you'd still think that this area could potentially be an area of support. And now all of a sudden you have, okay, so this key previous area that was resistance and has, you'd hopefully it would be a level of support now that it was, broken and converted over here. So this was the conversion point. And now this would be more of the, confirmation. Did it really get converted? Well, so far so good. Off to a good start when you have, the nice candle that is formed, and now you also have it forming right here along this moving average. So yeah, it would make pretty good sense that this would be, confirmed area of support. Well, what about resistances now? Where are some potential battlegrounds on any sort of move upwards? Well, the first one would just simply be this moving average right here. You can see that in the short term, this moving average is truly being a thorn in the side of this chart. I mean, try to get above it there, knocked down. Try to get above it there, knocked down. Try to get it above there. Try to get above there. So this 8 period has turned from a support, which it was right here, into a level of resistance. So the 8 period is going to be that first area of resistance. Notice now we're not even drawing any lines. We're just looking at our moving averages. Very quick, very efficient. However, we do want to assign some areas of resistance that are, with our lines. So let's draw a couple of those. And the one that, sticks out to me is right up here at this point. Again, looking at the dots, let's go back through the history. You can see dot, dot, and then right there again. So a lot of history right around here. And then surprise, surprise, look where this bounce gets rejected. So the bullish drama, I mean, there is some good bullish drama, which is, that's what we're all for. We love that bullish drama. Bullish drama, and then look right where it's get hits, right there. Should that be shocking, though, now that we understand and are starting to understand support and resistance? It should not be. Acted as support, support, support on this authoritative candle. Resistance or supports become resistances. So here's just a classic example of this area of support now turning into a level of resistance as it got rejected right there. So that's certainly going to be a key resistance. And then, again, going back out from the onion layer, you also have this area not that far above it. So it's very safe to assume, all right, this area right here on the chart, that's probably going to pack quite a bit of area of resistance. Now, if the price can get above that, that's a very good sign that, wow, the watt has really, there's a lot of give right now. Give, here, have my shares, and then right here. So this is the heavy give area. However, if the price and a candlestick can close above this area, that's a pretty big implication that, wow, the want has really come and overwhelmed the give. The demand has really all of a sudden increased to overwhelm that supply. However you want to look at it, the greed has really come to overwhelm that fear. Because right now people are fearful. Every time it gets up there in the short term, people have been fearful. And, when you combine this area right here, which is just shown that it's a resistance, combined with, the, not that far away moving average up there, it makes rational sense to say, all right, this should be a pretty solid area of resistance. But if the price can get above there, that's going to be a good sign that that's a strong bullish move. And right there, gaps up above it, nice candle. So at this point, you're thinking, okay, is history about to repeat itself? That's a very logical conclusion, and we'll speed things up. And indeed, history does repeat itself again as the price heads back up. So this was just a temporary bearish river, but because, looking at the overall chart, knowing what the overall context is, and then one of our 3 key points, learn from past history, and seeing that past history has produced some very nice moves, when the, 8 period has gone down despite, the overall rivers being bullish. This move here shouldn't be surprising, and it shouldn't be surprising that it happened when it did, with the type of candle that was formed, where it formed, and then seeing it get above this big, supply point or this big give point, however you want to look at that. That was the first leading indicator that, okay, this move may very well, start to pick back up, and that's exactly what happened. For this case study, it goes back to the lesson of, what is the core of the onion, right? The most current price action. What represents the most current price action? The candlestick of that period. So here we have this candlestick, and as we've established, a very nice gap up. However, after that, it was pretty much all bears, and it closed way down here. So not the best candlestick. And on top of that, all that happened on pretty big volume. Not pretty big. It was a very big volume relative to, the average volume that the chart has been seeing. So we look at that, okay. But then you look at the trend. The trends is very nice. I mean, smaller period above bigger period, smaller period above bigger period. So the trend is up. But just because the trend is up, does that mean that right at that particular time, especially after this nasty, now if this was a nice, bullish candle, that's a totally different ball game. However, is it a nice bullish candle? No, absolutely not. It's not. So it's one of those things where, yeah, the moving averages are showing us that the trend is up. I mean, they're all sloping upwards. They have separation, and it seems to be like this could have been the start of a new trend. Here was kind of messy. I mean, you had it up and then down, and then the 50 period was not really trending. If anything, it was kind of down. But at this point, it's almost like, okay, a new overall river is trying to get started. You finally have the yellow line sloping upwards. You finally have the 50 period sloping upwards, and the 200 period has been sloping upwards. But now, all 3 of these are kind of starting to act in unison here. So you got to be thinking, well, hey, look, the trend's starting to head back up. Well, yeah, it seems to be that way. But remember, moving averages are formed with what? Lagging information. It's what's happened in the past. I mean, it can still be useful as we've seen. However, the point I'm trying to get across is just because you see things that seem to be acting in unison and are acting in unison doesn't mean that you just go and automatically buy, especially when you have a candle like this. That candle is acting as a leading indicator because current price action, that's about as good of data as we can get via the candlestick, is showing us, okay, it definitely gapped up, but, this is not the best candle. So as we go through it, you remember what happens. If not, you're about to see. So first sign that, okay, things might be getting a little rough is what? Well, price came down here and is broken below this moving average. Not to mention this is an extremely bearish candle. I mean, the price opened, that's as high as it went. And then on the close, or on the low, that was also the close. So basically the only thing that stopped us from going down more was the closing bell. So now you have this bearish candle, authoritative candle that's closed below this moving average. So that's the first sign that things may be getting rough. Another authoritative candle. Now what's the next big test coming for the chart? The next big test is right down here at this moving average. And then look at that, surprise, surprise, bounce off of it. Now, just because you get one bounce doesn't mean this whole thing's going to continue, but you can see the 50 period trying to do its job as support. So now you look at that candle, and now you're probably really going, ugh. But why are you going, ugh? Well, first you're going, ugh, just because you got, the authoritative candle. But what makes this situation that much more ugly? Well, hopefully you're saying, well, look at that. It just crashed through the 50-day simple moving average. Absolutely. We've got more context now. So now the ugliness becomes that much more ugly. But we want things to be ugly because we want things to kind of slap us in the face and say, hey, this is getting pretty bad out there. And yeah, it is getting pretty bad. It all started here, and then we just kept getting more and more confirmation, with the latest confirmation being this very, very ugly day. Because, I mean, think about it. Before, the bulls had able to fought back up. So, Wanter, the bull, kind of flexed his muscle, said, this is my fort, this is my fort. Ooh, not anymore. The fort just got absolutely crushed. And that's why we should really be shrinking with, that much more. Because not only authoritative candle, but an authoritative candle that was actually that much more authoritative with the way it just crushed, the bullish fort down here, the 50-day simple moving average. So now the next test is, okay, let's see what happens. And maybe you noticed it already, but you look back here through previous history. The 200 has done a good job of providing support and, acting as, kind of a nice bounce point. So, Wanter the bear or Wanter the bull has now retreated back to this area, to this fort. So we'll see if the price can test it and then what happens with that. So it never quite tested it, but I'm going to speed things up. So right there, look at that. So isn't this amazing? An authoritative candle, but where does the downwards action just so happen to stop? It just so happens to stop right there at that line. Totally random if you look at any other locations on the chart, but it just so happens to stop right there. And now you get that interesting candle that's formed below this. So sure, it's been broken, but it's been broken. It's still, hasn't really separated from it. It's still well within this little range, but an interesting candle. And then look at that. Price heads back up from there. Now, does this happen every time? It doesn't, but, with a price that's closed, still within that range of this, and then you combine previous history. So previous history with a very, kind of indecision type candle. The indecision candle has happened right here around, this key Godfather moving average. And then you see it did indeed act as support. So, that's why the web effect is so very important. If we draw the kind of little web around here, the price is still within this little area. Right here, sure, it dropped temporarily below it, but still within the area of the web. Sure, it closed below it, but now if this was a big solid red candle and it closed right down here, well, then that's a whole different story. But this is not a solid red candle. This is an indecision candle. So that's what makes that all the different. But, without moving averages, we never take notice of that. We just say, oh, the price put in a new low. But now that we have the moving average context, we can see, all right, it's looking like, there's some potential here. And, it indeed did turn into a nice upwards move. For our next example here, this is going to be pretty much an example of who wants some spaghetti. You look at the moving averages and you've seen what some nice, beautiful rivers look like. And that just is not the case here. If we break things down, currently the 50 or currently the 8 period is going up, but it was just going up here and then all of a sudden down. It was just going up, here and then down. So this one's a lot of wishy-washy action. You can see that. And then you look at the 50 period. Well, it was going up, but now it's going sideways. The 200 period is going, sideways at best. So there's just a lot of congestion in here and not a lot of trending. Now, does that mean stay away? Well, if you are saying I only want to trade things that have clear rivers, clear trends, then yeah, you stay away. Again, this one, you start with the candle and you may be thinking, hey, this candle looks great. I want to go with it. But it's kind of the opposite of the previous example where when you start with the candle and see that, that's pretty rough. Whereas this is the case, you would look and say, hey, okay, that looks pretty good. However, when you work your way out of the layer of the onion, if you are a trend player and you see this, then that kind of ends the process right there. And you're like, well, this one is just simply not trending. Might as well move away. So you'd kind of have, that's such a nice candle gone to waste. So It can go either way. Now, if you are not totally a trend player and you want to start at the core, then you say, wow, this is a nice looking candle, very authoritative. Let's see if there's any follow through to it. And that's totally fine. But there is that, where this is why I keep preaching. It's all personal preference. It's all what's your strategy. Because if you want trends, then who cares what this candle looks like? At first, as you go through your onion, core candle, okay, looks good. And then you start to expand things out. When you get to, what's going on with the trend exactly? What are these moving averages doing? That's pretty sloppy. So it's one of those things where, it can go either way. We know that this one turns out well. However, if you decline on this one and you say, well, I declined because I want trending charts, then I'd say, hey, good job. That's a great discipline. But on the support resistance standpoint, kind of take a look at this. 200 period acted as support, and then when the price drops below it, resistances should support should what? Become resistances. So acted as support, price fell below it. Now look at this. Resistance. So pretty classic example of support turning into resistance there. However, from a trending perspective, what's going on? How are the moving averages helping us from that perspective? That is pretty rough. Now, on the flip side of things, let's just say, I'd prefer things that are trending, but I'm a little bit open to, candles. I mean, I care about price action as my number one thing. Well, let's look at this one from a moving average perspective and just support and resistances like we just talked about. So what did this candle, what makes this candle look just that much more authoritative? Remember, before we just say, oh, wow, that's an authoritative candle. But now we can say, wow, this thing is a beast. But why is this thing a beast? Well, now that we've added in the context of moving averages, what did it do in one single period? In one single period, it not only demolished the 200 period simple moving average and closed above it, it also got up here and fought through the 50 period. So the two Godfather moving averages in one period, it was able to fight through and get above. That's a pretty impressive sign of strength right there. And that's why you can look at it and say, wow, it's that much more authoritative than it already is. So that's why, when you add more context to these charts, things become that much more apparent. And in this case, the big appearance or the thing that becomes apparent is just how strong this candle is indeed. So let's just run through it quickly. And you can see the price heads up. So remember, this was an area of resistance. When the price closed above it, should become an area of support. And look at this. Multiple times acted as support right here. Did temporarily get through it, but then that becomes a thing of, okay, indecision candle forming right here at this key moving average, which should now be a level of support. And indeed, next day you can see got up above it. Price pulled back, bounced from it again. And while all this is going on, what did the short-term river do for us? The short-term river all of a sudden turned bullish on us. It had went from bearish to bullish. So yeah, while all this kind of choppiness is happening here, and for the most part, this one kind of little day sort of threw things off, but it really didn't throw it off, because when you take a step back and look at what's going on now with the short-term river, you can see it's bullish. And, on top of that, it's not like this was a nasty candle. It was an indecision candle forming right here around this key area of support while the short-term river has gone bullish. So it shouldn't be, shocking at all to see why the price headed back up. And you can see it then made, a big move up, and eventually, the short-term river kept on carrying it. So it turned out okay. Now, if you missed out on this again because you want things that are trending from the get-go, that's fine. However, if you're just, pretty much a candlestick player, you notice this. This definitely authoritative candle with the way that it hovered around this area of support. You got the conversion of this short-term river back to being bullish, and it led to a very nice overall play. In our final example here, things have kind of switched over from some of these other examples that we've talked about. Well, what do I mean? Well, let's just look at our moving averages to try to find these trends. What is the short-term river doing right now? Hey, look, the short-term river has a nice upwards move to it. But what about the what about the overall river? So maybe, to go with what we've been saying, here's our short-term stream. The stream is moving up. Okay, that's good. However, what are our rivers doing? Well, the first river here is without question bearish. A bearish river. I mean, this thing is, I think we can all agree this has a very clear downward slope to it. What about, but maybe, this is happening, but the Granddaddy River, the 200 period, has a great upward slope to it. Well, as you can see here, that is not the case. Clearly just going sideways. So very neutral. So very neutral combined with just in-your-face bearish. Yeah, you can't, this stream, I don't know if there's going to be that much hope for it. And then let's take it a step further. Let's apply one of those, core 3 things. Let's look back into the previous history of the chart. Well, you can see right here, the stream went bullish, failure to the downside, then went massively bearish again right here. Stream went bullish, and then went massively bearish again. Oh, look, the stream went bullish. Now, just because this stream went bullish, should you go and throw your kids' college tuition and everything else in here just because this stream is upwards? No, let's look at the other rivers, the other, whatever you want to call it, the other trends, medium term, or however you're defining the 50, clearly down, and then the overall chart at best is neutral. So what is that telling us? It's telling us, the overall context, despite, short term, yeah, it's bullish, but overall, things aren't really looking that good. And then you combine it with, and you had this nasty little candle here where the price tried to get going and couldn't and has pulled back. Things are just looking pretty rough. And sure enough, it heads back along. And now you can see, look at the 50. The 50 did, to give credit where it's due, the 50, the price did get above it, so it was trying its best to act as support. However, there's a lot of downwards pressure on it. Remember, the price is trying to swim upriver right now and go against the trend. And while it did make a valiant effort here, you can see right there that was the first leading indicator that, the 50 didn't hold. The 50 is now has turned back into an area of resistance. And then you can see from there, back down it went. And what happened to this river? History has repeated itself again. Bullish stream, and now it has turned back into a bearish one. And, it's just, things did not turn out well. But when you start to combine things, look at past history, and just know that, sure, the price is going up. And people that don't understand charts and everything, all they're going to see is, oh yeah, the price has been going up the past few, the past few, we're on the daily chart. So the past few weeks, the price has been going up. But they don't think to look, well, what about the overall context? And that's what we've done. They haven't thought, well, what about the past history when this has happened? Well, the overall trend is down. So just because there's a little upwards bounce doesn't mean anything in terms of the overall chart. Just like, remember on some of those where the overall powerful rivers was up, however, it was a temporary bearish little stream. Well, those are actually called, bullish pullbacks. Okay, it's pulling back within a grand overall uptrend. Here, it's just bouncing going up within a grand overall downtrend. And those are the ones where you have to be very careful of. As we saw multiple times here, down, down, and then right here again, up, down. That's what you have to be very careful of. And with moving averages and trends, it can lead you to that. So hopefully, you can really see how moving averages can quickly assist you, and how the little streams can act in conjunction with rivers to either tell you, okay, we have a pullback within an uptrend, or we have a dead cat bounce within an overall downtrend. So combine things, look at them with candlesticks, and it's just another piece to the puzzle. Now we're going to start to add in some more technical indicators, with the next one being the pretty famous MACD.